Welcome, ladies and gentlemen, day 2 of Edelmetallmesse here in Munich, and Commodity TV is online, of course, for you. We have now Gold Royalty here with Peter Behnke, the Manager of Corporate Development and Investor Relations. Good morning, Peter. How are you?
Morning, Johan. Thanks for having me.
Yeah, great for taking the time. Thanks for stopping by. I know you have a booth also down there, and it will be quite busy. Yesterday, I think it looked a little bit like an ignition point. Gold, $52 up, silver, $1.40. What happened?
Yeah, it was great to see and really long overdue. Our view of the gold price is the current $1,600 is ridiculous. This is a timely week to have this conference with the recent Fed increase in the interest rate. Taking a picture out, all-time high inflation over the last 40 years. Nominal rates are being hiked, but our view is the Fed has no capacity to increase nominal rates further. We'll see negative real interest rates in the near term and ultimately a higher gold price beyond what we saw yesterday. This is just the beginning of a continued longer run in the gold price, which is great for Gold Royalty as a gold company.
Absolutely. What's the next gold price target?
Privately, yeah, between you and me. Our view is a $3,000 gold price. And that's not just pulled out of nowhere.
Okay.
If you look back to the 1970s and 80s, the last big inflation run we had, and you adjust that in real terms to today, you would see an all-time high gold price of $3,000 an ounce.
And when do we have that, next year?
In the near term. I think when gold moves up, it moves up violently.
Yeah.
Like we saw yesterday, a big move in a single day.
Yeah.
When it starts to come in and capital really starts to flow into the gold space, we'll see it come sooner than people expect.
Yeah, especially I think it was really for all of us a big surprise, because on a Friday afternoon it was like, what's going on now? Really interesting. Okay, let's come to your fantastic company, and I have to disclose that I'm a shareholder in the company, of course, because I'm totally convinced of your business model. And David Garofalo, of course, I know also long time, your CEO. So what were, let's say, real milestones you have achieved this year? Things where you would say, hey, fantastic that we have the royalty now commencing to cash flowing. Where do you see the highlights this year?
Yeah, well, Gold Royalties really, we're still a very young company.
Yeah.
We just IPO'd March of 2021, 18 months ago. And since then, we've acquired over 180 royalties in 18 months. 2021, we did a lot of corporate M&A. We acquired 3 other public royalty companies. But then in 2022, we've continued that growth. We acquired a third-party royalty on the Côté Gold Project, going to be one of Canada's largest gold mines, 500,000 ounces a year. That was in March of this year. And then most recently, we picked up a portfolio of royalties from Nevada Gold Mines. It's the joint venture between Barrick and Newmont. We did a $27.5 million all-stock deal, and that brought us a royalty on i-80 Gold's Granite Creek project. So A, brought us a great royalty on a very high-quality asset, and 2, B, it brought on Barrick and Newmont as our second largest shareholder, the largest gold miners in the world investing in our company. And that's a good validation point of the company.
Great quality proof, I would say.
Exactly.
You guys are also paying a quarterly dividend, sorry. So how do you see, let's say, for next year, your growth path? I mean, you're generating already revenues. What do you think, will it be this year?
Yeah, so this year we're about $5 million in revenue. As you mentioned, our dividend, we just paid out our 3rd dividend at the end of the last quarter.
I got the check.
Good. Glad to hear. Make sure our CFO is paying out the money we need to pay out.
He's doing definitely.
And we'll look to grow that dividend as our portfolio continues to grow. We're a development story. A lot of our biggest assets are still coming online in terms of production, which means revenue growth, cash flow growth, and dividend growth in the future. Those key assets that are coming online are anchored by 3 cornerstone assets, 3 of the biggest mines in North America with the best operators and the best jurisdictions in the world for mining. The first being Canadian Malartic. And to digress from our core development assets, I think it's timely with the recent Agnico Eagle deal yesterday.
Yeah.
It's a great validation of the quality of that asset. It's almost a $4.8 billion acquisition of Yamana, or that's the offer by Pan Am and Agnico. And a big portion of that is allocated to Canadian Malartic. So they're really doubling down on that asset, which we love to see, given we have a 3% NSR over a significant portion of that asset. The Odyssey South project, where our royalty has a small piece of coverage, is set to go into production in 2023. And then our royalty really ramps up towards the end of this decade. The second key asset, Côté, which I mentioned we acquired earlier this year, is set to go into production in early 2024. It's the guidance that IAMGOLD's giving currently. And the third cornerstone development asset I'd highlight is our Ren project. It's the underground extension of the Goldstrike mine, the Carlin complex that's operated by Barrick and Newmont, which I mentioned earlier. Very high grade, very significant deposits. So those are all coming online in 23, 24, and then 25, 20, 26 for Ren. So.
Super. So that would mean for the next 4-5 years, your growth path is going like very foreseeable upwards.
Yes, exactly. We have pure leading growth. We've got 60% compound annual growth in our revenue for the next 5 years. And beyond that, as I mentioned, towards the end of the decade, we really see a big ramp up as a lot of our development stage assets come online. We've got over 200 royalties in our portfolio in total, roughly 30 at different stages of production or development. And that just really fuels the growth and the growth in our dividend for the future.
Okay, what would that mean money-wise? Today, for this year, you said $5 million. What would it be, let's say, in the next 2 years, 4 years, 5 years? How do you rate that? Or how would you see that? Are you going from 5 to 10, from 10 to 20?
Yeah, it's a fairly linear of that 60% compound annual growth. So you'll see 5 to roughly 8 in 2023 is what we're forecasting. See that 8 go to closer to 12. And by 2025, 2026, looking at $20 to $25 million in revenue. We're looking at $50 to $60 million in revenue by 2028, 2029, when Odyssey at Canadian Malarctic is fully ramped up, especially on the coverage that we have. Côté's in full production, and Ren's fully online at that point. Aside from the growth, I think what's even more exciting about our portfolio is the quality. Canadian Malarctic, Côté, Ren, they aren't just big growth assets. These are multi-decade generational assets that are going to produce out beyond 2050 when,
and then
who knows where we are.
Revenues,
exactly.
2050.
Exactly. It's very, very reliable long-term revenue within the company, which I think really differentiates us from a lot of our peers who have great revenue in the short term, but maybe it's a 10-year mine life, not a 30-year mine life on their core assets.
Fantastic. Looking at your dividend model, you said the dividend you want to raise also. So today you're paying 4 cents dividend for the whole year.
Yep.
Right?
Yep.
That is giving your share price 1.3, 1.4% yield approximately.
Yep.
Yeah. How do you see that developing? I mean, from 5 million, let's say, to 50 million revenues, as your cost basis is still stays low.
Yeah.
I mean, that's the beauty of that model, right?
It's the beauty of the royalty model. Revenue is linearly
except you take a $10 million paycheck.
I'll have to talk to my boss about that one. I don't know what he told you, but it's not 10 million. Anyway.
I know, David.
No. We keep very low overheads as a company, and that results in great free cash flow as our revenue grows. Yeah. We don't have a formal policy, and most of the smaller cap royalty companies don't. It's discretionary each quarter. But we look to have a balance between distributing capital to shareholders and using that capital to fund future growth within the portfolio and acquire more royalties.
Exactly. So we could say if you double from 5 to 10 million, maybe you double then a year after also the dividend. That might be an idea.
Yeah, it'll look at what the free cash flow is looking like, where the gold price is, but I think the only concrete is we will grow it. That's the confidence.
Love to hear that. Fantastic. So as you have already 200 royalties altogether now, do you want to grow that to 50, 300, or do you say, maybe we have to consolidate now a year long, or do you say, no, when we see a great opportunity, we grab it?
Yeah. No, we're a deal machine. We're in a constant state of due diligence.
A deal machine. Wow.
Oh, really? It's our entire business. Yeah. We're constantly looking at opportunities, whether that's corporate M&A, royalty financings, third-party royalties. We're always looking to grow the portfolio accretively. With that said, I think with the recent pullback in our share price, where our currency's at right now and where our multiple is, we have to be disciplined. We've built a really great portfolio, and we have to be very selective in growing it with more high-quality assets. We don't want to dilute that quality proposition we've built, and we don't want to dilute shareholders unnecessarily unless we can pick up a good quality asset at a great valuation. So we're looking at stuff, but it's a competitive market, and we'll be disciplined as we look to continue to grow the portfolio.
Okay, super. Do you have a special focus on regions, or let's say regions where it's a no-go for you?
No, that's a good question, and it does kind of highlight what we've built already. 80% of our portfolio net asset value is in Quebec, Ontario, and Nevada, the best mining jurisdictions in the world. And with that, it gives us the ability to potentially step out. On a portfolio basis, we can bear more risk than a lot of our peers in looking at different assets and potentially riskier jurisdictions. But with that said, we end up leaning towards looking at the Australias, the Quebecs, the Nevadas. We're familiar with those jurisdictions, and they give us that confidence to know that nothing funny is going on when you're investing in the best mining jurisdictions in the world.
Like to hear that as a shareholder. Super, Peter, thank you very much. Wish you all the best. Just keep raising the dividend. It's on my interest.
Yeah, no, thank you very much for having me, Johan, and pleasure to be here.
Yeah, well done, I would say, so far. So just keep it growing and do your deal machine, I would say. Thank you very much.
Absolutely.
Yeah, ladies and gentlemen, that was Peter Benke, the Manager Corporate Development and Investor Relations from Gold Royalty. Yeah, the deal machine is running 200 royalties the company has so far, and when they see a good deal, they want to make it, of course. What I like with the company is it's very young, only 18 months is approximately 20 months is old, and paying a quarterly dividend of 1 cent so far, but as Peter alluded to, with raising income or raising turnover they are creating with the company, they want to raise the dividend too. So probably a very wise idea to buy at those cheap levels. You have already 1.3% dividend, but as you can imagine, that dividend from today can grow to much, much, much more. And you are getting a company which is extremely well diversified, working with the biggest companies, gold producing companies in the world. So great quality, and I would suggest you have a look on Gold Royalty. I'm a shareholder already. Thanks for watching us, and bye-bye from Edelmetallmesse in Munich.